The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
So this is the dual engine we talk about is we've got our tier one facilities, which is our hash power that's mining Bitcoin, and then the tier threes, which is our AI high performance computing side. And this dual engine works out really well because you've got volatility on the Bitcoin side with the prices as we're seeing right now, but you've got the stability and the growth on the AI side. So having this dual engine approach is helping us capitalize on both sides of the equation.
All right, welcome back inside our Proactive newsroom. And joining me now is the Chief Financial Officer for Hive Digital Technologies, Darcy Daubaras. And Darcy, it's great to see you again. How are you?
I'm doing well, Steve. Thank you.
Yeah, well, good to have you along, especially when you're highlighting numbers like you've just released, your Q3 revenue numbers, another record, substantial, 93.1 million in revenue. Obviously, you're very happy as the CFO.
Oh, it's incredible, Steve. As I talked about before, 2025 was such a great expansion year on the tier one Bitcoin mining side with our expansion to Paraguay. And having Q3 being our first real quarter with all of our hash power up and running in Paraguay, these kind of results is what we've been talking about for a long time. And now we're proving to the market what we've done. It's great. We're very excited.
In the news release, you talk about margins, and maybe you can sort of talk us through that a little bit because you had a substantial increase in margins.
Yeah, the margins can be affected so much by the price of electricity and some of our other operating costs. The great thing about moving down into Paraguay, and one of the reasons we wanted to do so, was the low energy cost. So we're seeing that come through in our margins, having that lower energy cost on such a large amount of our footprint. Now that we've got 300 megawatts running down in Paraguay and just over 400 and something worldwide, having that large amount with the low energy down in Paraguay is really helping our margins. And with on the G&A side, we're not increasing our G&A. So that's the great thing is we're, quadrupling, some of our other numbers, but our G&A is only up, 1.5 to lower than 2.
Darcy, you talked about something earlier, and I want to pick up on it when you talked about that dual revenue, and that is because the company operates in two different facets, and you run those together and moving forward. So explain to us this dual engine and how this is working so well.
Yeah, when Hive started out in 2017, we were running GPUs when we were mining Ethereum. And now we're doing GPUs on the cloud with our high performance computing side. So this is the dual engine we talk about is we've got our tier one facilities, which is our hash power that's mining Bitcoin, and then the tier threes, which is our AI high performance computing side. And this dual engine works out really well because you've got volatility on the Bitcoin side with the prices as we're seeing right now, but you've got the stability and the growth on the AI side. So having this dual engine approach is helping us capitalize on both sides of the equation. And the way that we've built stuff in the past is having the power. You got to secure the power, got to secure the land, which we're doing with our tier one facilities. And that gives us that foundation to build into the tier three high performance computing in some of those locations that we've got tier one now, if the demand is there and we're able to build that out moving forward. So it's a great way. We're not a one-trick pony, and we're being able to manage it very, very well with the experienced team that we've got here at Hive.
And you in February you actually signed a 2-year contract with $30 million to do just that and get those machines going so you can get them into those tier three facilities.
Absolutely. And this is the first prong of the relationship that we've announced quite a while ago with Bell. So this is going into the first megawatt that we've got allocated to us at the Bell facility in Winnipeg. The team worked really hard to be able to get this customer. We're glad to have them signed for 2 years. And I feel this is just the beginning of the number of contracts that we're going to be able to sign on the Buzz side. And it proves to the market we can do it, proves to Bell that we can do it. And I think there's going to be great opportunities in our own facilities. And we've talked about the one that we've acquired at the Toronto Airport that we're going to be building out for tier three, and also expanding into some of the other Bell facilities across Canada and that relationship that we've got with them.
And in fact, in the news, you talk about trying to get and operate 540 megawatts as a footprint by year's end, and that seems you're well on the way to doing that.
We are, yeah. So we're at about 440 megawatts right now. 300 of that is down in Paraguay. We do have an option that we've announced. We've got a 100 megawatt PPA. We're hoping to get that online by the end of the year, which will bring us to 540 globally on the tier one data center side of the business.
Well, Darcy, really appreciate your time. Fantastic quarter, and we look forward to our next one. Okay.
Thanks, Steve. Take care. Thank you very much.
There's Darcy Daubaras, the Chief Financial Officer for Hive Digital Technologies.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.